Hey everyone, this is your weekly Precision Markets office hours call with your Precision Markets coaches, Brian and Marco. We host this call every Tuesday and Thursday, 12 o'clock Pacific Standard Time. That's GMT -7 time zone wise. If this is your first time joining the call, our format's pretty simple. We answer questions in the order that we receive them, and then coaches will, the questions that are put in the chat, or you can feel free to come off mute. Coaches will go ahead and just discuss anything that you have questions wise. And with that, we'll go ahead and begin. Oh, just waking up from a nap, guys. So remind me if I'm sleepy. I'm glad this week is over because my gosh, this week has been so annoying.
Yes. It's finally holiday tomorrow, so I will not even look at the charts, I guess.
Yes, I'm sleeping in. I am not waking up. I'm not even going to take a peek.
Yeah, same.
Especially with the market jumping up like the way it did with CPI. It's
Mm.
going. I will catch y'all on Monday because that price action needs to greatly correct itself.
Yep. And CPI just left a huge imbalance, so we can expect it to be filled someday, but we don't know when.
Exactly, man. It's gonna take forever to fill that there.
Yep. It's pretty low, actually.
And what we have also we have what's it called? We have I can't think of the word. We have a U.S. bank holiday tomorrow. So
Oh, okay. So tomorrow is not happening for sure.
Yeah, New York session is not going to be anything. Watch watch London session reverse this entire imbalance by itself tomorrow. No,
I wish.
right. I wish that could happen. So yeah, you're not gonna catch me from London tomorrow. Forget that. I will catch y'all on Monday for real. I am ready
Yep.
I'm ready for a new week. Seriously.
It will be
It's like
morning
every
here, but
huh?
no, saying that it will be morning tomorrow here, of course, for London, but I will be
Yeah,
just sleeping.
I know
Sure.
that's right. Shoot, it's been like every other day. Oh, excuse me. Every other day this week, guys, it's been some type of jump. Last Friday, it was because of NFP. Monday took some time to refocus itself. Tuesday, we had the election, and that caused it. Wednesday, the market was refocusing itself and then enjoying the election. And then you fast forward today, CPI. So it's like this whole week has been a wash.
Yep.
So tired of it. Well, what kind of questions do y'all guys got?
Yeah,
Cool.
well, nothing specific.
Did you trade today?
No, I almost just got home.
Smart man. Very smart man.
Yeah, I saw that the a lot of people I know they made a lot of money was on the right side of the CPI. I see a lot of them are bragging on Instagram.
I'm looking
But
for the
yeah, I'm
people
sure they
who
could have lost a lot of more if they were on the wrong side.
yeah, that's the part I was watching for. I wanted to see the people who lost money on CPI. I mean, some people enjoy the gamble of it, right?
No, yeah.
But
Can you imagine prop firms would post some statistics how many accounts were blown today in that in those 10 minutes?
oh wow, I want to see that.
Yeah.
I want to see that.
Yeah, I mean you can gamble this, of course, but you know it's really just a gamble, you know. It might work once or twice, but
What's the name of the fractal indicator you guys use? I use another one.
I just use fractals. It's just simple type fractals on the indicators. It will show you. It's very simple one.
Made from Rachel T.
Let me see. Yeah, Rachel T. Yep.
Again, the fractals, like that's the the internal of the internal. you may say, or was it just the highs and lows, but not structure wise,
It's
just
just
like
the high.
makes up the high or the lows.
Yeah, it's just the highs or the lows. Nothing
Yeah.
structure wise.
I'm just using it to see where are those extremes, and then if they're get running, I get a reaction. That's it. I'm not even putting too much on it.
Do you use it for targets? Or?
Yeah. But actually, you can see there is, let's say price is bullish, and you can see there is a long wick somewhere ahead of you. Then that could be my target. That's it. So that's also probably a fractal. If you turn the indicator on, so I would be just targeting that one. That's it. So I'm not counting how many breaks it would have done, or if it only one, maybe I can expect another one. I don't care about that. I just use it for my targets. Yep.
Yeah. But yeah, last time I saw you can change your from 3 to 5 candles, or for it to show. Or
I think maybe Brian, but I think it's only for 5 candles. That's the basic of the fractals.
Oh yeah, I don't even use the fractals indicator. So I think I saw somebody on Tuesday do that. It's Fractals by Rachel T, right?
Yeah.
I saw somebody do that. Hold on, let me check. Oh, it's another one. I remember somebody sharing their chart on Tuesday, and the fractals did. You could go from 5 to 3.
yeah, that's what I remember also. But the one from Rachel T doesn't seem to have that option.
When was it? On Tuesday? I'm just checking the Discord if who was that?
I think it was Perry. Perry was the one who shared his chart. I'm gonna ask him. That's a good question.
Yeah, but I want to see what's the difference actually if you use 3 or 5. So maybe the
5 is probably more conservative, I think. I would say.
Yeah, so would be showing more more points, I guess, if you use 3.
Yeah.
I think here comes Perry. I think here comes Perry now. Sorry guys, I'm falling out of sleep.
Yeah, well, there were also some noise in the crypto market this week with FTT or FTX and all that stuff.
That's a very nice way of putting it.
Yeah, it was 20%, 30% down. Today is 30% up. Who knows what will happen tomorrow? So
yeah,
it's crazy.
The market's going for zero, man.
Yeah, looks like.
There's a lot of money parked in stable coins though, so probably
not no more.
Huh?
Not no more.
It's not. Last I checked, there was a lot quite significant. I haven't checked in a while now.
At the rate this is going, stable coins are going to disappear off the face of the earth, man.
Yeah.
It's sad to watch because I'm really not for regulation, but if they don't regulate stable coins, man, crypto's not gonna have a place because stable coins is the whole issue that keeps happening. Luna dropped. That was the first stable coin. FTT was the reason why FTX dropped, because it was a stable coin made out of thin air and the values weren't tied to anything. So If the values had actually been tied to something, it might have last. But Alameda Research's balance sheet was nothing but FTT, which was a made-up token. So kind of crazy stuff. Crazy stuff.
Can you talk a little about the inducement? Like inducement, is it like the word says, in theory, like they're trying to convince you to put your or enter the market here and there to lure you to do that? Is that more or less inducement?
Marco, I'll let you answer that one because I don't trade off. I don't even use inducement.
Can you ask again? Because I don't know if I got you completely.
Now, inducement, is that like a trick or a lure to get people into enter the market here and there? Or,
it can produce traps, but actually the inducement is usually where people are putting stop loss just above the, let's say, you have a price dropping and you see a weeks up, there's inducement, and the people are putting the stop losses just above that one. So market usually just does this weeks, so that people are trapped there, and then it takes them. So that's the usual how the inducement works. So when you see when the price reverses and shoots through all these weeks and taps into the, let's say, higher time frame supply higher, then all this liquidity inducement, which was below this supply, gets taken, and then the price reverses. So actually those inducements are used to fuel the orders which are higher.
Yeah. Like external and internal range of liquidity is like external, is that like a swing structure liquidity?
Yeah, exactly. So let's say all this inducement for me is just internal liquidity that is collecting, like a liquidity pool that's developing, and then when the algorithm is decided to wipe it wipes everything, hits the external liquidity, and then usually does the reversal.
Yeah.
I got another question. Brian, can you go to the first things you look at the market? Yeah. Give me 1 second. Let me share my screen, guys. It is hot in here. Okay. I mean, guys, it's really not that much, honestly. Look at the same things every day. So the first thing I do is I come in, I look at the daily. I wonder why my indicators are all out of whack. No, I come to the daily. I mean, that's my higher time frame. I look to see, okay, what type of supply or demand are we going towards? And I figure out what's going to be my direction for the market for the day. So before we start the day today, the market was doing this, where structure-wise, it went from a low, a high to a little low, higher high to a little low. So it looks like it came into this supply.
Use the indicator, or do you use your 5 or 3 candle pivot method?
Yeah, this is my indicator based upon 5 candle pivot. I don't use the precision markets market structure. I have my own market structure based on 5 candle pivot.
Is it private or shared?
It's private. So come in, look at market structure. Looks like market structure is going to head downward. So for the day, thought we were going to try to take out these lows down here. And that's what I thought coming in for NASDAQ. So now that I have my directional bias considered, then I go to my time frame. I look for my POIs, and Wednesday. I go to today. I wake up, and I see that indicators are still doing things they're not supposed to. Even that one. Oh well. So price comes in, I look for my supply and demand zones that support my directional bias. It's really those two things. It's not really much. It only takes me about 10 minutes to do for 6 different pairs. Just look at market structure, and I look at structure, points of interest on a lower time frame, and that's it. I wish it was anything more, but that's pretty much it.
Yep.
Let me know if that answers your question.
Have you tested out Hanko trade, the one we were talking about last time?
Yeah, slippage is pretty consistent across all the brokers. So I kind of a little bit of slippage with my trades I took today, but no sweat. I got less commission, so that's saving me a percentage back. So
yeah, I
Hey,
saw
hey,
like
Brian.
$1 commission per lot.
yeah, it was good. And spreads are okay except for indices, but I live. Just get the direction right. That's all that matters.
Are there other good options also? Like that's the cheapest one I have ever found. I thought iFusion Markets was the best one I found, but then when it's all about Hanko trade, like twice as cheap, double as cheap as Fusions.
Fusion, IC Markets is going to be the best provider because they have the best liquidity. That means like when you enter a trade, you don't really get any slippage. All the other brokers, even if they have cheaper prices, you just get bad slippage. So that's pretty much what you get. Fusion's pretty good, but they still have normal slippage. I've heard
Why don't
too.
you use IC Market?
Oh, we're American, brother. We can't. Not even an option. So the problem is a lot of brokers don't accept Americans because back in 2011, one of the things I don't like that President Obama did was that he passed his financial reform. In most the countries that people go to is shells in Australia and United States to be able to like start brokerage companies. Well, the beauty of shells is if you have $500,000, which is fairly simple to get when you're investing in a business, you can start up a brokerage. Very loose restrictions.
Like, can't you?
And then what's it called? United States, it used to be $1 million, and then they upped it to $21 million in reserves. And you also have to have operation space in the United States. Well, after that, brokers start leaving United States. They're Forex. That's why you have all these unregulated brokers that serve United States citizens. So the only way to get around it is you have to have an address overseas. Physical address or address with electricity bill. So they don't. Most places, the best brokers or the good brokers don't serve United States citizens, and the best definitely don't. So the other place is Australia. Australia has more stringent and stricter requirements when it comes to Forex transparency and consumer protection laws. But if you get a broker with Australian license, that's like basically the golden of Forex licensing. If you get one with shells, they're probably shady. But hey, as long as they're not stealing your money, that's the best part.
Yeah, I'll know a lot of CFD brokers in Europe. They have daughter companies or daughter companies in the Seychelles and other places. So in Europe, you have to follow the SISEC or what's it called, and you only get 30 leverage. And then a lot of them have daughter companies in the Seychelles and offshore, where they have the higher leverage license.
Yep. Oh, and then thanks Perry for sending that message. He sent me the fractals indicator, so I'm gonna send you the one that he uses is fractals by nephew Sam, and then that's the one that allows you to switch from 3 to 5.
Oh, okay. That's a nice one.
Mm-hmm.
Yeah. Hey, Brian, which one do you like better, 3 or 5?
I don't use the fractals indicator. but it was just a question we had earlier before you got on. I think Marco, you say you use it. You use fractals, right? With the
Yeah, I
5.
just have them on the chart just to see the extremes, but that's it. I don't use it for the structure anyway.
Mhm.
But I will check this one and see if it helps me a bit.
Yeah.
Okay. Hey, Brian. On Nas today, can you if it wasn't CPI, can you bring up your chart and then would it be sales in this certain area where the last 15-minute POI was? Would you be looking for sales or would it be buys? Please let me know.
Yeah. So when I approached the morning this morning, I didn't have this mess of a chart. I don't know what my indicators are doing today. I guess this is what happens when you tell your computer you're taking the day off. So I did not get what is it doing. What is the visibility? Who changed the settings, bro? Okay. Anyways, all right. So when I came to the chart this morning, this is what I saw. We're going to treat this as a CPB, but for me, these are PBRs. So price went from this higher high, it made a lower low, made a lower low. So the hope was this would become a lower high and would take out this low. We got this first touch to the zone. I mean, this reversal zone down here, price pulled back, and then price took another stab into it. Now, if this failed, and I mean, if this continued, I was expecting it to take out this lower low, we get a lower high, lower low. I knew that I knew that, for instance, today we're gonna get inflation was gonna come in lower. That wasn't the question. The question was to me was the core inflation going to drop? And that was something I wasn't sure of. But knew headline inflation was going to drop down. But I thought core inflation was going to come in line, whatever the case, it would give probably a bullish reaction. Wasn't expecting what we got. Now the market wants to rally because now they think, oh, this means the Fed's going to drop their interest rate raises and we're going to get closer to the pivot. Like everybody wants to pivot so fast. So seeing that this week has been doo-doo trash, we come into the day here. I saw that we had this supply zone, and I also saw that price really wasn't going nowhere pretty much all day. So I was like, great, we have this means they're waiting for some type of the news release. They want to see what's going to happen before they move the market, because it seems like every other day this week the market wants to move, and then it spends the alternative days just trying to decipher the fact that it moves so fast, creates so much imbalance that you had to be filled. So my expectation really was that price was just going to keep on going into this what's it called, and it sure didn't. They decided to wait and wait and wait. And so as soon as I seen this, I said, oh crap, this is where the fun starts. I took my trades I took my 2 trades in London, took a 5R on US 30 and NASDAQ, and then US 30, I broke even. And after that, I said, I ain't touching a single thing. And then next thing you know, we get the news and we take off. And after that, as soon as we got the news, closed up the computer and said, all right, it's vacation time. I will see y'all on Monday. So does that make sense?
Yeah, so I just wanted to know if we were thinking the same. So I was right to look for sales then.
Mm-hmm. I think we get a bullish reaction, but like I said, I wasn't going to play the news. Even if I had tried to make a buy, I would have been taken out with that wick. So wasn't worth it.
Got it.
Wasn't worth it. I want to see US 30. Saw some guy who supposedly put in a trade on Instagram right here, and I didn't see where he had his stop loss. But He posted his screenshot. He made profit, so he posted his trade like right here. I don't know what kind of stop he had. I don't know what was his basis for even buying in the first place, but yeah. He played the news. He played it well. He won the spoils of victory today, but
Yeah, well, it went like 125 pips, or no, well, on Euro USD it did. How much was that move on the NAS or the?
oh, I think it went more than that, buddy. Yeah. Well,
Yeah, I watched. I
217,
think I
crazy.
watched on the 15 minutes. Yeah, imagine having a 10 pip stop loss there.
205 pips to the high. 230. At least it's making some new structure on 15 minute. At least it's not pulling back. The market said they're done with the strong dollar. You need a 20 pip stop almost. This is going to start the narrative that the market's going to start change direction from now on.
I like 4-hour structure. How is it looking that wise? You take out a lower high or?
Let's see what we get 4-hour wise.
Huh.
My
Yeah, it's in the area.
In a doozy. Oh, you had a break here. Huh.
Shouldn't you get that lower low there on the indicator?
Yeah, it won't happen until the next 4-hour candle.
Oh.
It's delayed.
But it hit, wait, let me get the notation. See here, it hit this one. 4-hour, I guess.
Yeah, isn't that an inside bar?
Yeah,
That's
also.
one.
Yeah.
Yeah, and yeah, like last time we talked about it, the inside bar, and then the next candle goes down and sweeps this.
Yep. And you see the reaction was just from it here.
But like when you mark out structure, do you what do you do like to like if you get a sweep of liquidity and that's and you normally would mark that as a new high or low, like, but it's only a sweep of liquidity. How do you like come to the conclusion that it was just a sweep of liquidity? So it's you may not put your structure point there.
If let's say if you had this one, so it was a sweep with the wick, so I just move my lowest point of all this stuff to here. Yeah, so this is my lowest point, and that's it. If I get a break with body here, then I know that it's changed. Otherwise, everything that wicks into it is just a sweep.
Yeah, so you just look at if it wicks pretty hard, it you then don't qualify that as structure.
Yep. I think Brian, you are taking like the whole range, yeah.
Yeah, like this, for example, that's a pretty significant wick to take out over here, it seems.
Yeah, it gave some reaction, but then was broken yesterday. No, yesterday on Monday.
Yeah.
What was this? What was the reason for this week? Oh, that must have been.
It's Wednesday on the 2nd. What was that? FOMC?
No.
Let me see.
Jobs.
Okay. Yeah.
Oh, wait. FOMC was Wednesday. You're right. I'm tripping. That is it. Wednesday.
Do you use the indicators on TradingView or just go on a factory, a Forex factory?
I'll use both. So, I mean, I use both. I leave them down there so I can see it. Sometimes it doesn't matter. You can't get your really news from one place because one spot will have it red folded, one spot won't. So it really just depends on what you look for.
Hey, that was FOMC. It was November 2nd. This
Oh,
one.
you're right.
Yeah.
You are right, brother. And I don't even look at 4 hour. So we've been buying from this. Let's see. My demand H4. I don't even look at 4 hour. I doubt I would have bought this anyways on Euro USD. Knowing that we were coming into this and we have all this sideways movement. Yeah, I would have missed this.
I was looking at the one I marked before a bit lower because there was some imbalance to fill. So I was expecting it could probably come down, and it did, but yeah, see.
Yeah,
That
sure
one.
did.
Yeah.
So just had a shakeout.
Yeah.
Where price goes from a lower low to a higher high, higher low,
Yeah.
higher high, came down, made a lower low, shoot back up to make a higher high. Hopefully it does something like this to continue. When do we start looking for buys?
Isn't this a higher high?
No, it's a lower high.
Yeah,
It
this
broke
one
this.
also.
No. So it broke both times. So it broke here, made a lower high to a lower low, comes back, broke this low. It never passed this high. So that's why this is a lower high.
Yeah, shouldn't it pass this point to qualify as a higher high? So it passes this one, and then this would be a higher high.
But that's with a wick. It's not with a candle body.
Yeah, right.
Yeah, only looking at candle bodies, not wicks. So, when we start looking for buys, I mean, now if you use 4 hour structure, I mean, next week you really should expect some pullback. So you should sell until it comes into some type of demand zone. Looks like this is the strongest demand zone that it has, and then you'll start looking for buys. You start looking for buys here after that. I mean, the same thing, guys, you do with the M15, the M1 is the same thing you do with 4 hour to M15. So it's all market, it's all structure at the end of the day. That's how you find it. And then Perry, you asked about if NAS is going to be in an uptrend. We'll see, man. But let's put it like this. I'm just gonna go back to the daily, a time frame of choice. What I expect that we get for the month ahead is that Euro USD is going to break this lower high. I expect that now that we go to, you look at AUD USD, it broke this lower high. I have doubles. Okay. Yeah, it broke this high after I expected it. It was pretty much going to go down. Then we go to USD JPY. Finally, the BOJ is rejoicing that they don't have to burn any more money to make the market go down, make the value of the yen go up. So I expect now that we're going to start seeing a narrative shift on all these pairs. Gold just took out the high that it had. So it's now looking like it's bullish because it's made 2 higher highs. NASDAQ, if you look at this, the market was really trying to find some type of bottom because it went from a lower low to a higher high to a lower low to, you get this crap where it consolidates at the zone, tries to push, fails, tries it again, fails, comes back into the zone. We're already at the 4th tap inside the supply zone. It's more likely going to get ran, and we start getting something like this. Maybe it might come down here because some bad news comes out. But as long as inflation starts coming down like it is, the dollar doesn't have a reason to be as bullish. US 30, I mean, right now we're in basically what looks like to be a consolidation. We go from a lower high, lower low, higher high, lower low. If this fails, or even if it goes higher, it doesn't matter because we still, if it goes higher, we have 2 higher highs, 2 lower lows. That's not a trending market. We would need something like a low and then go up higher for us to be able to say that we're in an uptrending market. So
Yeah,
I think
2
this,
high solos to qualify as a trend.
or 2 higher high, 2 consecutive higher highs, but you have to have a higher low in the middle. So you can't have this lower low.
Oh.
So if it went from lower low to higher high to higher low to higher high, then we would say we're in an uptrending market.
Yeah.
But
What do you look at the internal structure also, or do you just trade from the swings when you do it, or mark your structure?
no, I mean, you pretty much know where price is going to go. So like the whole time it was doing this, the only thing I look at in internal structure for is figuring out what supply zone or demand zone might it reverse from, right? So I'll look and say, okay, here's the zone it could reverse from. Okay, here's the zone it could reverse from. And so my expectation might be that we come up and reverse from here. And then
Yeah, like this zone, like it got this zone got mitigated over here.
yeah, I don't look at mitigations like that. I really just look at simply where was a strong push. So here we had a strong push that meets my POI rules. It happens to correspond with this candle, but specifically what I see from the push is that it made this push. All of this is consolidation to me, so I don't really care. It goes from this low to make a new push. It was a weak push, so I don't care about that. It makes this push was strong. It makes this push was strong. So the only 3 POIs I'm looking at would be the ones that made strong pushes. So, I mean, this one had already been destroyed, so I didn't pull that. But I would only be looking at these 3 and saying, okay, price maybe, if it doesn't come from this level, maybe it might shoot up from this level, which in this case, it did not.
How do you like this zone got tapped into a lot of times? Like why do you this got tapped into many times? Why do you still look at it as valid then, since it's relatively taken out so many times?
If it doesn't get tapped, if it hasn't been tapped more than 3 times, I'll still use it. Because I've seen zones tap 7 times and they go. I've seen zones tap once and they fail. Number of times it taps isn't really you want a fresher zone. So I'm still going to pull the zone because I don't know what kind of reaction is. But for me, it only been tapped 1 time, 2 times, and this would have been the 3rd time. So if it went, great. But if not, wouldn't be surprised either. So
yeah, it got a small reaction here and then failed.
Mm-hmm.
Like, do you look like this is a lower low, and according to strong highs and lows, yeah, this is weak. Do you take that into consideration also, or?
Well, that low is actually strong. It wouldn't be weak because it put in a higher high. So
Yeah, that makes sense.
So I mean, kind of, but not really. Like I was thinking, all right, if this is going to be a weak high, then that means that price has to go past this high. So it's going to go up from one of these zones. But all we had one chalk. One chalk isn't enough to change the direction. So that for me was just let's see what happens type of thing.
Yeah, like a chalk here from or where would you put your chalk?
Well, it happened where it made this lower high got broken and it made a higher.
Yeah.
I made a higher high. So
yeah, now the internal structure is going down from here.
No, I'm not. I don't really care about the internal structure. That doesn't really mean much to me. What I was saying is that it made, from a structure point, it made a chalk here, right? That's where the chalk happened. So at this point, you could have expected price to do some type of move like this and take out and make a break of structure, but it just didn't follow through. So what ended up happening was we go from this lower low to this higher high to this lower low point, and now we're in no man's land. So now it's like, okay, it could go higher or it could go lower like this. So we don't really have a direction. This is how we know the market's trying to find potentially bottoms or whatever it wants to.
Yeah, also like now you have your higher high and your lower low. It's gonna take a lot of days before you can get any more structure points from the daily time frame.
Yeah, it's going to take a while. I mean, this was
but in the meantime, you just go on the lower time frames and look for entries there, or do you wait till?
No, still taking trades, because regardless, I mean, all these points were potential supply points for me. So you get some type of reaction at some of these points. If the lower time frame shows me the chalk and same market structure shift, then I know where to take it. But right now, as of next week, I'm buying until we get to this spot. If I see a chalk here, I'm going to sell. If it breaks that chalk, I'm gonna go back buy. I mean, you can still trade it, even though you don't have a trend.
Yeah. Also, like now you're on the daily time frame, so and on the daily time frame, this zone is probably gonna be very huge, and you trade on the seconds. So like if price goes into this zone, like you drop then down to the 15-minute and look for a chalk.
No, I would drop to the 1 hour and look for a chalk, not 15-minute.
And like I mentioned, this is very huge, and then you go around the you go to the 1 hour and then try to refine this zone even further, or make it smaller from the 1 hour time frame perspective. Yeah. Like when you mark out your zones, to take the whole range, or do you have do you take the pivot, the candle, the wick, or the range? Do you have or just you do all and then refine on the lower time frame?
When I pull my POIs, I take pivots.
Yeah, like here, this is more of a range maybe, and like here we got a couple of candles.
Well, I mean, this is the point that made the higher high. This is where it had the reversal. So if price, this is a de facto supply or resistance spot, regardless. Price is going to have to pass through the zone. So I want to know what's going to happen here, because this is the last form of resistance that I'll have. Down here, price made a pivot. Down here, well, this was not the zone I used. I did not use that one. It doesn't meet my trading rules as far as what I would consider a strong POI. But I always go for pivots. I hardly ever pull single candles. Candles don't always get me in trades. And secondly, a lot of times they get missed where the actual POI is. So
pivot is the same thing as range?
Not exactly. People look at range and pivot a little bit differently. So you might consider this a range. I consider this a pivot. And the reason why is when you look at, you can go to a line chart if you can't see it, but this was the high point. This is the lowest point it made, and then it broke. So that's why there's a pivot. This was the high point. This was the lowest point it made, then it broke. So when I pull my zones, it's a demand. I'll go from the high point to the low point, and that's why I call it pull a pivot. They look very similar, but what most people do is they look for like a range of candles. So they might consider this a range, right? And pull this supply. What I look at is I say, okay, price came here to here to here to here. So for me, I'm going to pull from that low point to that high point. So as soon as it breaks this low point, that's where I pull my supply. So mine would have been like this.
Yeah, but most of the time, then wouldn't you just ignore the wicks? Then
no, you have to look at the wicks. That's the whole point.
Yeah, but
the
like
wicks,
if you use the line chart, then the wicks most of the time won't show.
They I don't use the line chart. You use the line chart to get a bearing, right? So if you can't see it, then I would start at the line chart and say, all right, this is the lowest point, that was the highest point, here's my zone. Then you come back to your candles and then account for the wicks, because line charts don't account for wicks. But when I'm looking at the charts, I'm always looking at wicks. I'm looking at, all right, price, all these wicks get higher, higher, higher to this point. We have a 1 wick pullback. This is the lowest point before it breaks with a candlestick body. That's how I know, all right, this is my zone that I pull. Like this.
Yeah, but like for definition, like a pivot, is that 2 or 3 candles, or when in like the pivot, like what's actually is that by definition? Is it like 2 candles or?
Say it one more time.
Like pivots. What exactly is that? Is that the two last candles?
It's not about it's not really about the candles when I look at the pivots. It's
but like pivot, like what actually is the pivot?
The pivot is when you go from a high point to a low point to a new high point. That's the pivot. High, low, high. So all of this is a demand, but you have to look at where it's almost like looking at structure, right? So all these wicks get higher, higher, higher. So this is now the highest point it's made. This is the pullback phase where it goes to the lowest point and then it breaks with a candlestick body. So therefore, from that high to that low ends up constituting a zone where price moved more sideways. And that's how I know this is all demand. So the same thing I'm applying up here, right? The wicks go, I can't tell if these are the same. Here it goes from this high point to this low point. It makes a pivot pullback. It comes down here. It goes all the way down here to making this low point to this high point, and it keeps on going all the way down until you get to here. So this would be a pivot-based supply right here.
Yeah. So same over here. The market goes up this and then you get this area.
Yep. So I mean, look at the wicks. This wick, you went from this high point to this low point to this new high point to this low point to this being broken at this high point to this low point to this being broken. So really, you have
you got 3 zones there.
Yeah.
Huh.
Now,
I see why that can be complicated or seen as range. They look really similar.
Yeah, they look really similar. Well, it's just a little bit different. Because with range, what you're really looking at is you're looking to see if there's sideways movement. And what sideways movement really looks like is something like this, where you say, oh, look at all these candles when you move sideways. As comparison to this kind of moved sharply down and then moved up. This moved a little bit down and then up. This was just the inside bar and then up. This was more of a range right here where somebody could pull their zone like that. But they look kind of same.
Yeah.
Hey, Brian, you at the top where the higher high, you wouldn't pull the whole supply zone to the top of the wick. Well, from the top of the higher high and to the top of that wick that creates another supply zone. because of the
show me where?
imbalance.
Show me where?
I don't even know how to get on the screen like y'all be doing. I don't.
Great. You talking about this right here?
Yeah, right there.
Oh yeah, I just didn't pull it, but
Okay.
that's what I just actually erased it. But yeah, this would be your first supply. So that's where come on Monday, I am going towards doing that. So
No, but I'm saying, but would you? So you wouldn't bring it down all the way to that to that wick, cover all that imbalance
to what way?
to the wick right below it, right? No, to the right, up, no, up.
This one?
Yeah. Would you bring it down to that wick to
No.
cover all the imbalance to the left?
No, I wouldn't.
Okay, why not?
Because it's not a pivot. This is, well, you could go from here to here.
We'll see. I'm not okay. I was just meant like just to cover. I know you could, but I just meant just to cover that imbalance from the top of the wick. Just to cover the imbalance.
No, I don't care about covering the imbalance. I really don't. That's more of an ICT thing. So ICT kind of talks about making trades off fair value gap. All I care about is covering whatever pivot we make. So it made a pivot here. I mean, it's very subtle. You can't see it, but it went from this high to this low point, and it made a pullback here, and then it came all the way down, made a pullback here, came all the way down. So you essentially have, you have a zone here. You pretty much have a zone here too.
Mm-hmm.
So that's the stuff that I would cover.
So don't you trade imbalance? You don't do imbalance?
No, I don't trade imbalance bills. I just trade, basically, I want to see it break with imbalance. That's the difference in my POI. So like this one broke with imbalance, right?
Yeah.
Here we had a pivot, but it never broke with imbalance here. So I would not pull this as a zone, even though this was a pivot break. I'd be aware of it being a POI. It's just going to be, it's very weak. There's less chance for us to reaction. And take a look at it. The candles never pulled back in this range at all. This is the one without imbalance. This is the one with imbalance. Look what it did. At least we got a reaction. Price went downward, right? Price taps in and gets another one candle. And then now it broke. So POIs that break with imbalance for me are high probability. So I just stopped pulling anything that's not high probability.
So, but you see that POI that broke with imbalance, it never tapped your zone. It only tapped the imbalance.
This one?
Yeah. So you come down when it on the lower high to the right, it never tapped your POI. It only tapped the imbalance that you didn't pull. Yeah.
You talking about this one?
Yes. So that candle did not tap your POI above that. It only tapped the imbalance of that imbalance candle. Correct?
Yeah, I'm talking about this right here. But this, yeah, this, you don't, when we're here, I'm not pulling these zones. We haven't broken nothing yet. It's always about looking left, right? So at this point, I'm expecting price to do something like this. I don't even care. I don't care that there is a, what's it called here? I don't care that there's a supply, because it's all about paying attention to market structure. It's not until we get this break below do I start saying, oh, where were the last supplies? Oh, here's a supply here. Here was a supply here. Because now my expectation is price is going to go up until it hits one of these two areas and maybe stop. Does that make sense?
Yeah, kind of, because I would think on the way down, it has to do lower lows and lower highs. So I would thought that would be a POI for it to hit.
No.
Come down.
No. You're confusing internal structure. As soon as price makes a move here, our expectation is that price maybe is going to come down somewhere and then go upward. Everything that happens on the way down here, I do not care what happens. It's very inconsequential. Because the whole point is I'm looking right to say, okay, here's a demand zone it could reverse from. Here's a demand zone it could reverse from. Here is a demand zone it could reverse from. So I only care about it tapping one of these demand zones and then heading upward. I don't care if it taps into a supply that it recently created. So it taps in the demand zone, think it's going up. Okay, it fails. All right, cool. Yes, this is a supply. But at this point, I still don't care because I'm still expecting that price overall is going to take out this high. And if it ends up stopping here, let's say, for instance, we did get a reaction from the supply zone and it comes back down and comes back up. Cool. But my still overall direction I'm going is up. I just know that this is where you get into CPB. So here would be a CPB right here. This is what Nathan would classify as CPB. We expect price not to reverse direction, just to get a small reaction, and then price continue to go upward.
Okay, so if price never made that higher high, and we were heading down, if price just made another lower high, would you still pull zones? Like,
no, I still wouldn't. You're not going to pull zones within the same leg. Like I don't. So let's put it like this, right?
I must be thinking about the 15-minute or something right now. I don't.
Yeah, this is all higher time frame right now. We're not even on whatever our lower is.
Yeah.
So
I gotta go, guys, but nice call.
No problem, brother. We'll catch you in Discord. Wish you best of trading. If you decide to trade tomorrow, good luck. I will not see you.
Yeah, we'll talk later. Bye.
All right, brother. All right, bye-bye. So as it comes up, right? Say for instance, it's making demand, right? Makes demand. Coming all the way into the supply zone. I really don't care about these demand zones until price comes back down.
What time frame is this?
This is just, we're only looking at one time frame. So This is whatever you consider your higher time frame. Ultimately, those demands will cause moves like this, right? But ultimately, price is going to go down. So right now, we were only looking at the higher time frame. So when you're looking at the higher time frame, all I care about is market structure and potential reversal spots, which would be supply and demand zones. But it can't be all in the same leg, right? So when you do market structure, there's two legs to it. You have impulsive waves and you have corrective waves, right? So in a downtrend, everything that follows the actual trend direction, those are your impulsive waves. And every time it goes upwards to make those lower high spots, those are what you call your corrective waves. So I don't care about what happens zone wise. I mean, supply and demand wise. Like if we're in the impulsive phase, I don't care about the supply and demand zones created on that wave. I care about the ones that were created on the previous wave that could be a reaction point. This is what it looks like in a perfect market. This is what you get though in real life. So this is the exact same thing, but just given more of a context so that every time, ooh, I did not do what I wanted to do, but okay, we'll make that work. Pretty much the same thing. So So that's pretty much what it looks like in real life, right? So every reaction that you keep seeing, it always comes from the previous wave. So that's the drops here. These are the reaction points here. These are the reaction points here. Does that make sense?
Yeah, I get it. I understand now. Thank you.
Mm-hmm. Yeah. All right, guys. Any more questions? Any last question before I go back to sleep?
Done with the markets, huh?
Uh-huh. I'm done till Monday. I'm ready for this wretched week to be done.
US 30 up 1,200 points.
Oh, bro. Everybody's excited. They're like, yay, this means we're almost done with belt inflation. The next thing you know, we're going to be locked in this thing for the next 2 years. So, hey, we need some good news right now. People are hurting, so.
Okay. All right, appreciate it.
No problem, brother. All right, guys. Good luck on trading tomorrow. I will not see y'all tomorrow. If y'all do, y'all some brave souls, a lot braver than me. So, good luck to your trading. Recording will be up on Teachables. Papa let us know once it's up. Don't forget, we'll have calls next week on Tuesday and Thursday. If y'all have any questions or you get a chance to answer, feel free to answer away. But to CPI helping us all get Lamborghini Aventadors next year, guys. Y'all have a great day.